So you want to make instant income? Well, I got you. One of my favorite ways to do this is by selling covered calls. So you might ask, what does that even mean? So when we're selling covered calls, you have to have 100 shares of whatever stock you pick. So for example, let's say I buy a stock and it's at $100. I'll choose what's called a strike price, the price I think the stock may want to go to. And let's say in this example, I pick 110, right? And also I have to pick a expiration. So I like to do this on a monthly basis and make income on a monthly basis. So I like to pick the third Friday of every month. So for this example, we have stock A, that's $100, saying that it'll go to 110 for a month out. And when I place that trade, I immediately get deposited money. And I know that sounds too good to be true, so what's the risk? So with this stock that I bought at $100 with a 110 strike price and a month expiration, if that stock goes past 110, I have to give up my shares. I still keep that initial premium because that gets deposited immediately. And also I get the benefit from wherever the appreciation is from 100 to the 110. But the downside is, what if that stock went from 100 all the way to 150? I missed out on all that gain. But the good news is I still have the premium and I still made some money. So let's look at this, a live example of this with one of my favorite stocks, Oklo. Okay, so we're over here on the charts and we're looking at the stock called Oklo. And Oklo is one of my favorite stocks. And in this whole AI revolution, you need companies like Oklo to power the data centers that all the information from all these AI chips are going to. So I really think Oklo is going to be an up and coming stock this year. It's not one that I'm just fully recommending because they're not a profitable company, but I think they have a lot of potential. Got a lot of untapped potential. But before we go any further, this channel has reached an all-time high in subscribers. We've hit that milestone of 100 subscribers, and I want to say thank you to each and every one of you. All right, so let's get back to business. So over here on Yahoo Finance, looking at the stock called Oklo. On the chart, I have Bollinger Bands pulled up, and I have a 50-day moving average pulled up. When we're selling covered calls, you want to sell covered calls at the top of the band. And look what we have here. We have Oklo out the band. And usually when you have these Bollinger Bands, any period that the stock is outside the band, it usually snaps back in eventually, right? When we look here, we're outside the band. So this is the most ideal time that I would want to sell a covered call against this stock. So I just wanted you guys to see the visual representation because that's how I decide. I'm not going to sell a covered call with the stock trading down here. I'm going to wait till it's somewhere near the top because in this case, I want to keep my shares. So I need to pick a price that's above this $34. So I'm going to look somewhere in that $40, $41, $42 range. And when we hop over to Webull, I'll explain what I'm actually looking for. Now, you can be more aggressive with the strike price you pick if say I've been in the stock for a long time, right? Let's just say $10. And now it's trading at $30 and I'm ready to get out of it. I might choose a more aggressive strike price. I may choose a 35. I may choose a 34. Because if I do that, the premium I get is going to be more. The more closer you are to the current trading stock price, you're going to get more premium because you're taking more risk of the shares being called away. But in this case, I want to get some premium, but I want to mitigate some of the risk as far as losing my shares. So let's hop over to Webull and we'll take a look. Okay, so we made it over to Webull. We have the stock called Oklo pulled up, and the stock is currently trading at $34.15. I bought the stock at $25.49. So I'm currently up like $800 or so in the stock right now. But I want to sell covered calls against the stock for for additional income. So when you look at an options chain, you usually have calls on the left and puts on the right. So we're focusing on selling covered calls. So I'm going to make the visual a little bit easier to see and put just calls. And I have 20 different strikes up here. Okay. So I'm looking for a delta of around 0.3. So that's what I'm looking for. So I got all my metrics up here, delta, gamma, all that good stuff. So I'm looking at delta. I'm gonna scroll down. So now we have some 0.3s here. And this delta also represents the percentage chance that the stock is gonna hit that strike price. And you see the delta of 0.37, that's at the $40 strike. And I like that. Next thing I'm gonna look at is open interest. You see, the larger the open interest, the more people are interested in that strike. So for me, there's a lot of people interested at that $40 price. That is a very attractive price. So the likelihood that it gets pushed to that price is just higher. So I like to choose the next one. So I may choose the 41 strike actually. And if I choose the 41 strike, I can expect a premium somewhere around $223 and $233. You gotta remember, option contracts are dealt in bunches of 100. So one contract is 100 shares, and to see the price you're paying or receiving, you just move the decimal to the right 2 times. So in this case, if I choose the 41 strike, which I like very much, I'm gonna get 223. I'm gonna try to get somewhere in the middle. Try to get 225 or 230. I'll get that deposit to my account immediately. So let's see if I can place a trade here. Make sure we're on single option. Make sure you got your stock, your ticker symbol correct. You want to make sure you got the strike price correct. Your expiration, the type is a call, and you want to sell the call. We got the quantity, and we're going to do a limit order because we want to dictate the price. So it's currently going for 225. Let's see, can I get 225? So if this goes through, I get $225 deposited immediately. So submitted successfully. All right, so let's check and see if we got filled or not. Okay, just got filled. And if you look at the cash, we got 224 unsettled. So that's right there. That is the premium that just got deposited to the account. And you see it increased my buying power from the 1900 to $2,000 here. So now I can take this $2,000, or we'll stay focused on the 224. I can take that 224. I can go buy stocks. I can go take this out of my account and buy something with it, groceries, some shoes, whatever I want to do. But it was just that easy, instant money. And so what I'm looking for now is the perfect way that this can play out is when we get to that February 21 mark. If Oklo goes to $40, if I can get that max profit, but it does not hit the 41, that means my 224 is safe and my shares are safe. But we'll see. Okay, so we placed the covered call on Oklo. So when we look here, we see my cash balance has moved up from 1,900 and so to $2,000. And you can see some of the other shares and other companies I have in the account right now. But the main focus of this video is Oklo or Oklo. You see I got my 100 shares here. And we got this thing right here. So this is my covered call. So it links the shares and the option together. And then I got my 220 from the option call that we sold. And don't really worry about the option. moving up and down, it'll go all the way positive 220 if the contract expires worthless, and that's what you want. I want to keep the shares in this incident, so I want this to eventually say positive 220. Now it'll tell you it's a negative number if it starts going, you see it switch negative, but as it goes towards the strike price and past it, this will be a negative number, and it'll just kind of show you how much money that you are not capturing by having to give up your shares. So we'll check back in on this when we look at the total profit for this entire trade. I bought my stock at $25.49, so I bought 100 shares at $25.49. So from $25.49 to $41, and when I say $25.49, I'm talking about $25.49. So from $25.49 to $41, that'll give me a net of about $1,500 or so dollars. And then you have to add in the premium, so the $220. So that $1,500 plus $220 will be the total for this trade if I'm to get assigned. So if they call my shares away, that's what I walk away with. I walk away with the initial cash I invested in the stock, that $1,500 stock appreciation from the $25.49 up to $41, and my premium. So I keep all that. The downside is, what if Oklo goes from what if it runs way past $41 and it's at $60 by February 21st? That's the downside. I just didn't capture all the gains, but technically I didn't lose anything. So that's why I love selling calls, because you don't lose anything. It would suck if I lost Oklo, because I'm not ready to quite give it up yet. So that's like the only negative or drawback. You might not hit your max profit, or you might have to get rid of some shares of a company that you really like. So I hope all that made sense, and I hope you guys can see, like, you can make instant money on holding shares that you already plan to hold anyway. And so this is a great strategy just for income, just to produce income, and it's also a great strategy to use into retirement. So imagine if, I did this with one contract, $220 with one contract. So imagine if I had 10 contracts, like how much money that would have been off one trade. It was just a couple button clicks. So if you made it to the end of the video, thank you. Please like and share this video, and until the next time.